Hey, what's up guys? Crypto Numpty back for third video in the series on my channel. Last video I went through bull and bear markets and also some candlestick patterns and how you can find out about candlestick patterns. Hopefully you've been away now and read up on them, and hopefully you now got a better understanding of what you're looking at when you're looking at candlesticks on a chart. This video I want to go through some of the technical indicators that are also useful on a chart when planning your strategy. So I'm hoping that no one's gone away, opened up an account with an exchange and deposited funds and started losing money just at this point in time before you've managed to build your strategy. This video I'm going to go through MA, or the moving average, the EMA, or the exponential moving average, the RSI, the relative strength index, and the MACD, which is the moving average, convergence and divergence. I'll also go through Bollinger Bands and some of the other technical indicators and tools that I use before I start making a trade. Very quickly, I've just come onto the Crypto Watch website and started having a look at some of the markets. There was quite a lot of red on the markets over the last couple of hours. They've started turning green. XRP, or Ripple, has been having a good day or a good afternoon. That surged in price. In fact, I'll just go over to my exchange. We can see Ripple Bitcoin from just adjust the resolution, so we can see this massive jump in price in Ripple. I actually managed to make some trades there and make some profit, but I'll go through some of the technical indicators. We can see the moving average indicator, which is the one that we're going to start with, is displayed on the chart at the moment. We can see these squiggly lines, so I'll just go through and explain what they mean and how to understand and how to interpret them and how to read them. So a moving indicator, a moving average indicator is exactly what it says, is exactly as the name suggests. It's a moving average. It's an average of price over time. And on this chart here, we have that set up to 8 days, to 21 days and to 35 days. So all these are telling me are what the average price is over 8 days, what the average price of the value or asset is over 21 days, and what the average price is over 35 days. And then moving. The best way for me to represent this, if I just go over to QFT charts, again I'm looking at Ripple Bitcoin here. I've got the resolution set to 1 hour. If I just quickly put up this here, so this rectangle here represents, if we ignore the resolution for a second, this rectangle represents the 8-day moving average. If I take another one on the chart and I put it down here, this one represents the 21-day moving average, and as you guessed, this one represents the 35-day moving average. So all it's doing is it's taking these and it's moving them along with the charts. So as the chart keeps passing to the left, these values or these boxes, these indicators, they're going to start moving over with the chart. And as it moves over with the chart, the price is then plotted on the chart for that day. So it's an amalgamation of all of these values and it's plotted in for that day. So if I just skip back to Binance, we can see here earlier on, we're on the 29th today, so we can see earlier on today the yellow line, which is the 8-day moving average, is above the 21-day moving average and is above the 35-day moving average. So typically as an indicator, this gives us a good idea of what the price is doing over 3 set periods of time. And the idea being is you're looking for crosses at these points in time, and it's typically when the shorter prices cross over the longer prices, or the 8-day crosses over the 21-day or the 35-day. So you can see this area here was a very good indicator that something was going to happen with the price. So that's a brief description of what the moving average indicator is. So next we have the exponential moving average. I'll just get rid of the moving average indicator, and you can see that this is doing something very similar to what the moving average indicators were doing. And all this is, it's exactly the same as the moving average, but it's more accurate. So what this does is this reduces the time period over which these calculations are made. So you can see instead of the 8-day, it's reduced down to 5-day. Instead of the 21-day, it's reduced down to the 13-day, and so on and so forth. Again, this indicator is going to give you a more accurate reading of what those prices are doing, those average prices are doing. So it's quite easy to calculate. You can go online, you can look at the calculations that are made to plot these lines on the chart. And you can see that it uses a different algebraic formula to calculate the values to plot on the chart. So understanding what the market is going to do next is just another way or another string to your bow, really, when it comes to reducing your risk before developing a trading strategy. The next thing we need to know is we need to know how volatile the market is. We need to know what the momentum of the market is. Now, in terms of the momentum, we have two indicators, two of the main indicators used for momentum. We have the MACD and we have the relative strength index. Okay guys, so the next indicator I want to discuss briefly is the MACD indicator, or the moving average convergence divergence indicator. We'll just get rid of the moving average lines on the chart there. What the MACD indicator does is it takes the 12-day EMA, the 26-day EMA and the 9-day EMA and uses those to calculate values and plot them on a graph or on a chart or a graph, whatever this is, as so. The easiest way to explain MACD in my world is to think of this as a swing. And for a swing to move, it needs momentum, it needs some force behind it to be able to push it either forwards or for it to swing backwards. Now, if we think of the swing as this line here, the swing at the moment it's just sitting there static, it's not moving anywhere, and for it to move in one direction or the other, it needs a force on either side. So standing at either side of our swing is a bull and a bear. And what's going to happen is, if the bull pushes the swing one way, we're going to see this line here. The bear pushes the swing the other way, we're going to see this here, and the bull and the bear, and so on and so forth. That's the idea of momentum. Now, the more momentum or the more push the bull or bear give the swing, the more these lines are going to move. So if they're just touching it a little bit, it's going to swing a little bit, and if they're going to give it a really big push, then it's going to move more. Particularly today, we can see this afternoon, Ripple XRP, the bulls gave the swing a really big push and it went really high in the air, and it looks as though that swing's now coming back down to the middle, and it's going to sit, potentially it's going to sit in the middle, potentially the bears could come in and give it a big push the other way, and what's going to happen when they do that is the price is going to drop down sort of to this level. And in order to know how much or how far that swing is going to go, we need to learn about support and resistance lines, which I'll go through in a later video. So that's the MACD bars there that you can see. That's my way of explaining them. I know it's quite a strange way of explaining them, but this is just how I learn. This is how I sort of teach myself. The lines themselves, MACD, we've got, as I say, the 12-day moving exponential moving average, the 26-day exponential moving average, and the 9-day exponential moving average. Only the 12 and 26-day are plotted on this graph here. The 9-day EMA is used purely for the calculation. If you go and do some research on the internet, you can find all this information out yourself, but again, this is just my explanation of it and my understanding. What we're looking for is we're looking for the 12-day period being above the 26-day period. Typically that is a positive move in the market, and we can see some examples down here. We can see where the 12 crossed over the 26, 12 being the white and the 26 being the yellow. So we can see this crossing point here. This is positive, and we can see indeed the market from that point there to that point there did rise, albeit very, very slightly over a 15-minute candlestick chart. We can see then it dropped below, and yes, the market did drop. We can see it came above, and we can see that the market did rise again slightly, and thus is the explanation. This period of time here, what I do when I'm looking at these, I don't just look at whether the line is above or below. What I also do is I look at these and I look at the momentum. So this is what I'm looking for. I'm looking for a strong push by the bulls, which we saw here. This is this morning, or this afternoon actually. We can see there, instead of the line moving off in a sort of, or even moving below the 26-day, it actually took quite a steep drive up there. Now that's a very good indication of market increase, and certainly around this point here, because you want to give yourself a little bit of leeway, around this point here would have been a very good time to get into the market, because we can see there's a lot of momentum from the buyers. And that's quite a crucial indicator when you're looking at markets. People drive markets, or in some cases machines, computers drive markets. So we have various people like myself watching the markets and making trades. We also have computer algorithms making trades as well, and they're going to be set up with quite expensive, quite complex setups, and they are what are driving this change in the market. Now that could come from a bit of news on one of the forums, or it could just come from market general feeling, but 9 times out of 10, in my experience anyway, it is random. It is just so random, it really is. And that's why, as I say, these indicators are just one part, and the candlesticks are just one part of building your strategy. Your overall strategy needs to be a package. You need to be looking at market direction, you need to be looking at candlestick patterns, you need to be looking at indicators, and pull them all together to make a very informed decision on whether to trade, whether to buy, and whether to sell. So that's a brief explanation of the MACD strategy. Next indicator we're going to go to is the RSI. So the RSI strategy, as we discussed previously on the MACD indicator, the bulls and bears pushing this swing, what we need to do is we need to know, or we need to get an idea of how much momentum this push is gonna send that swing. Is it going to be a tiny push, or is it going to be a really big push? So for that I use the RSI indicator. Again, the RSI indicator for me is a very good indicator. What this does is it takes the average of the upward price change and the average of the downward price change. It does a quick calculation, and it plots them in a chart here. The values go from 0 to 100, and depending on where these values are on the chart, again we go over a 6-day, a 12-day and a 24-day average of price change. And this is telling us what that change is. What's that increase in change? Is it a small increase, or is it a large increase? And you can see these tie up to the candlestick patterns as well. So you can see the peak there for the short day, or the short time period. We can see the peak there corresponds with this green candlestick here, and we can also see this peak here corresponds with these 3 candlesticks here as the increase. The red candlesticks are the drop or the fall, this trough here. So the peak is the green candlestick and the red is the trough in the candlestick. And what this does is this moves this index above or below 50%. So 50% being your marker, your 0 point. I know that sounds very strange, but 50% being your marker, or your 0 point. We're looking at prices above, so in the 50 to 100%, and below 50 to 0%. Typically when you're looking at the RSI indicator, we can see this massive increase here, up into the 97%, into the 96-97 percentile. Over the shorter period RSI. I mean, that's indicative of a very big jump in the market, which we can see here. So the RSI indicator is giving us an example or an idea of whether a stock is or a commodity is overbought or oversold. And when we think about the principles, again, just going back to the first video, it goes back to the supply and demand principle. So something's more in demand, it becomes more expensive, and something that is less in demand becomes less expensive and therefore less valuable. So when I'm looking at the RSI indicator here, we reference the 50% or the 0 mark here. I'm looking for a 0 mark would be it's neither overbought or oversold, it's just this value and it maintains that value. When it gets into the 40 to 90 range, it's typically a bull market trend, and we can see that here. I mean, we've got 40% down here and we've got 90% up here, and we can see that that is definitely a bull market. We can see the price rising there and definitely rising there. You can see it's decreasing now, and it's going to be getting into the 10 to 60% range. So when it gets into the 10 to 60% range, these are the sweet spots. If they go above or below that, you can expect a market reversal. So if it's above 90 or if it's below 10, you can expect a market reversal. It's always trying to get back to this 0 point, or this 50% point right in the middle. Hopefully that's a good explanation of what the RSI indicator is, the momentum indicator is. So just to summarise, we've got the moving average indicator, which tells us what the value of a commodity or an asset is over time, and we can see whether it's increasing or decreasing in value over those periods of time. We've got the exponential moving average, which just gives us a more accurate indication of those prices. We then start looking at the RSI and the MACD indicators. So the RSI and MACD indicators are telling us how much that price is going to move over a period of time, and we can tell us if that value is likely to change using the RSI indicator. You can see there, just going back to our candlestick patterns, we've got a nice red reverse hammer candle there. That tells me that the price was falling, and this was a rejection of the price going any lower. So it opened, it dropped, but then the bulls came in and said, no, we don't want the price to go lower, and expect this candle to remain green. This is a 15-minute candle, so I can expect this candle to remain green, and potentially there might be an increase in stock price. What could happen is there's a little bit of a fight going on at the moment. So what could happen is the bears come back in. You might see a green candle here, but then we might see some more red candles. And again, that's indicative of this neutrality of buying and selling on the RSI indicator. We can see we're getting down towards the 60-50% mark. It's all trying to get back down to neutral. And also down on the MACD indicator, we can see this massive surge. We can see a nice steep line separating over the 12-day EMA above the 26-day EMA, but we can see it plateauing there. And again, we can see this movement is flicking up and down, so there's indecisiveness here. I'll probably expect this now to drop down to below the 26-day EMA. Okay, so lastly, for the indicators then, I'll just skip over to the chart, and we'll just start looking at Bollinger Bands or Bollinger Bands. These are normally quite a good indicator because they are price channels based on price volatility. Again, we say that volatility in price is a good thing for traders because this is our time to trade. If a market isn't moving, then we don't make any profit. The more volatile a market is, the more profit we can make. So if we look at Bollinger Bands, they look quite strange. They look a little bit, I don't know, like an intestine, I suppose, with the stocks moving through it, and eventually it's going to spit something out at the other end. It might be good, it might be bad. But yeah, these Bollinger Bands here are, as I say, they are a channel, a price channel. We've got the upper channel and the lower channel, and these are plotted depending on how volatile the market is. Again, using XRP and Bitcoin, we can see there's a very good example here. Through this period of time, we can see that a non-volatile market. We can see over from the 14th of September right the way through to the 18th of September, nothing happened in the market. The market was stable. The prices didn't increase or decrease too much. And again, as a trader, when you're looking at making profits, you're looking for things like this. You're looking for a non-volatile market, because markets don't sit there static forever. They're going to move. Again, it might be a news story that comes out. Someone might post something on Twitter, and that's going to invoke volatility in the market, which is what happened here. We'll just move into that a little bit more. Yeah, so we can see the price sort of fluctuating a little bit, and you can see the Bollinger Bands there. They give you a very good indicator of this this lack of volatility in the market, this lack of movement. And then all of a sudden we get this massive growth, and the Bollinger Bands then they expand quite a lot, because it was quite a large divergence from this lack of price movement. And again, we see them pinch down here again, and I'm always looking for these pinch points. I'm always looking for something that that has settled down. Is it's the rough and the smooth, and this is definitely the smooth, and this is the rough, and this is where we make our money. So Bollinger Bands will move based on whether the price increases or decreases as well. So we can see, in this example here, we can see that the bands narrowed quite a lot, and then they expand, but obviously the lower band is going to expand, and that's because the price dropped quite dramatically. It then increased, and then it pinched again, and then the market dropped, and the Bollinger Bands. So I'm always looking for these pinch points in the Bollinger Bands. This was quite a good one here. This was very indicative of quite a long period of time, particularly as a day trader, where the market isn't doing anything, and it's normally a sleeping giant. Time periods like that are indicative that something big is going to happen. We don't know what. The opposite could have happened here, and the market could have dropped, but it didn't. It increased, and again another pinch point here. Over a shorter period of time, I might add, we can see it slowly decreasing over the period of pretty much 2 days there. We can see it decreasing, and then all of a sudden we get this massive explosion. And again, the same here. We can see them decreasing, increase a little bit there. This would have been a really good time to buy in, and again, this would have been a really good time to buy in. So that's a quick overview of the Bollinger Bands. As I say, the price channel's based on price volatility, so it's how much the price moves. We'll plot these lines. So if there's a big price drop or a big price increase, will be dependent on how much these lines move outwards. And once again, you can't just use one of these indicators as a good strategy to buy or sell. You need to tie everything together. You look at the market in general, have a look at where the indicators are showing good signs, and also have a look at these Bollinger Bands, see if there are any pinch points showing. This is quite interesting to me. I might start making some trades on XRP, because this shows that the XRP price is going to move, but I wouldn't just use this indication alone. I'd start looking at the moving average, I'd start looking at the RSI, I'd start looking at the MACD, and try and get a feel for where the market is. I can see this is trying to get back down to neutral. I can see the MACD, the RSI. The RSI is way up in the 90s, telling me that that's actually massively overbought. Yeah, overbought. So if it's overbought, actually that indicates potentially there's going to be a lot of sell-off, or people want to buy more, even though it's overbought. People want to buy more. Who knows? Last indicator I'm going to go through is not one that's used by everyone, but I think it's a very good indicator, particularly for me. And on Binance Exchange, you know, you can start looking at multiple time periods for a commodity or anything that you're going to trade in. So this is a 1 minute chart there. We've got the 5 minute chart, the 15 minute chart, and the 30 minute chart, which I've just set up. And actually, we can see on the 1 minute chart, there's a lot of battles going on here between the bulls and the bears. If I take a look at the moving average as well, the 8-day and the 21-day moving average, I can see that the 8-day has crossed above the 21-day moving average there. Let's have a look at the Bollinger Bands. So yeah, the Bollinger Bands, I can see that they've pinched up after this massive increase today. I can see they're pinching up. The same on the 15-minute chart here, I can see that they've pinched up there, on the 30-minute chart. So you can see this narrowing here, which was earlier on today anyway. Interestingly, if you look at the minute chart, that's a coal face version of what's going on. That's exactly what's happening right now, and we can see all these trades are going on. Trade history is always a good one, because you can see how many reds and how many greens there are. So there's a massive sell there, that's going to be a red candle. We've got a lot of greens here, potentially that's going to be a green candle. If we just wait a second, we can see we've got a big bulk chunk of green here. We've got a few reds and some more green, a few reds, some more green, a few reds. So at the moment this is going to be a green candle, because there's a massive block of green trades, or a massive block of buy trades over the sell trades, and you can see that's indicative over here. You can see the candle at the moment is red, but it's sort of teetering on the brink, and there's a whole load more buys, so that's going to push this candle back up towards it being a green candle. There it goes, and then we get a few more sells. And so over that period of time there, we can just have a look at the trade history. We can see that the greens and the reds, they didn't massively outweigh each other, which is why we got this green doji here. And we can continue looking at this, so you can see we've got a bigger block of reds now. So now an easy way to look at this actually is using a depth chart. I'll go into a bit more of an explanation about this chart. These drops here are actually large quantities of XRP that someone wants to sell for this whatever price is down here. So we can see there's a massive drop at 7,997, so 7,997 XRP. Someone wants to sell a large chunk of coins, and the same there. These small spaces in between, or these small plots in between, are the smaller sellers. So this is what's going on over here. And yeah, again, this is quite a good indicator of the momentum of the market, and also what the value of the market is. So typically what we're looking for a bigger green block than we are a red block. So if we have a bigger chunk of bulls pushing the swing, then the price is going to increase. If we have a bigger chunk of bears pushing the swing, then the price is going to decrease, and we can follow that along the bottom here. Okay, so that's it for this video, guys. Don't want to go into too much and too much detail. I hope my explanations are helping anyone out there who wants to start trading in cryptocurrency, who, like myself, isn't from a financial or trading background, so might not get some of the lingo on some of the other videos. I try and explain it in a really simple way, and hopefully the more videos I do, the better I'll get. But I'm going to try and make a concerted effort not to get too technical, because I don't know what the technical terms are, so that's going to be quite easy. feel free to leave any comments on the videos, any more content or any more explanation you'd like me to go into. I'm going to put a few links in the description to some of the indicator tutorials that I've been looking at on the internet, but they're quite easy to find anyway. It's very difficult to to get anything wrong when you're looking up indicators, because they are methods that are created by mathematicians and not by just by traders. So I was just going to say the XRP trading. So I did trade on XRP earlier on today when it started going through the roof. I tried to use my strategies, or I thought would be a good way of looking at things. I'll just get rid of some of these indicators here. Yeah, so I saw this sign here. The lack of market volatility. We've got some candlestick patterns in here that were quite good signs, and the market did increase. I was still waking up at the time, so I wasn't really sure what was going on. But we did get some buys and we did get some sells in, and we made a little bit of profit, not as much as we could. I was quite tentative at first. I didn't buy too many, but I think if we just go back through the time period for this morning, so it was 11:30, 11:33 and 11:34. So you can see that I bought there. So I bought 1,496 XRP tokens. I bought them for 8598, or 0.00008598 Bitcoin. That was per XRP token. And then this is what we're looking at here. I sold for 8696. You can see those orders were filled there. The ones that were cancelled, on the right here, this was just going like the clappers. It was going up and down and up and down. And when you're buying currency or you're placing a trade, you need to make sure that you're buying it for as little as possible and you're selling it for as much as possible, to maximise the profit. So that was a really, really small profit there. I then tried to buy in again 863, but it was just skyrocketing up. I managed to buy there at 8788, and as it was just continued to grow and grow and grow and grow, I started trying to look at some of the indicators. I literally just fell onto this as it was happening. I tried to start looking at some of the indicators. I managed to sell for 8800 there. I then bought in again at 8705. It dropped. And just so on and so forth. You get the idea anyway. But I was just buying when it was low and selling when it was higher than I'd bought it for. Again, there it was such a small increment, but by this time I was at the top here. We start getting candlesticks like this where we just start looking at. You start getting candlesticks like that, it's an indication of okay, so maybe that was it, and that was the first chunk of buying, but then it started skipping back up again. And when you get two candlesticks, we have the spinning top there, which by now I'm pretty sure that spinning top will look familiar to some of you. And that's when I sold. This was the last trade here at 8746 and sold at 860, and by that point it started coming back down again. So that was just a little bit of quick trading this morning. I haven't set up my trades for the day yet. Okay guys, so as I say, if you like, please hit the like button, subscribe to my channel. I'm going to be posting a load more videos in future. Just go through more tips and tricks and things to look for. And as I say, I'm still learning, so the more I pick up, I'm looking at trading bots at the moment, so the more I pick up, the more information I'll pass over to you guys, and hopefully you don't make the same mistake that I made when I first started trading and managed to lose some money. Thanks a lot, and I'll catch you soon.